This is lesson 4 of the W5T Elite Training course, and this time we're going to discuss multiple time frames and how we can use them to get in those ultra high probability fifth wave moves. First of all, as usual, please pause the video, read through this risk disclaimer. Everyone watching this presentation adheres to all disclaimers on Wave5trade.com. So we're going to be discussing two main strategies to help traders in this lesson. The first one is confirming direction of a main trend. So if we found a potential trade on a 60 minutes or a 90 minute or a 120 or a 240 or even a daily time frame, we need to understand the direction of the main trend and confirm that. So we're going to be learning how to work up a time frame or two to confirm the direction of the main trend, and then we must then confirm the potential fifth wave trade is in the direction of the main trend that the stock is in. So then multiple time frame continuous trading opportunities is our second strategy. We're going to be monitoring the performance of a trend across multiple time frames. So this continuous fifth wave trading opportunities that we're going to find during a trend on multiple time frames. So first of all, confirming a trend. Just some simple rules that should start to become part of your natural routine when working a potential trade. So if you found a trade on a weekly time frame or potential trade on the weekly time frame, go up to the monthly, see what's happening. How is that? Where are we? Is it a bearish trend? Is it a bullish trend? Is it going sideways? Try and understand that main trend. Also go down to the daily, see where we are on the wave count, see where we are in the trend on the daily as well, so you can give that overall picture. If you've got a potential time frame on the daily time frame here, we need to work up to the weekly to understand the main trend direction, but also go down to the 60 minute to see what we're doing intraday as well, just to get that overall picture. Because remember, you're going to trade off the daily in this instance, but you need to understand what's going off intraday and what's going off on the weekly time frame. And then on the 60 minute time frame, you've got a potential trade there. Go up to the daily and the weekly, get that overall picture. What's happening? What's the direction of the main trend? Is that potential fifth wave move on the 60 minute in the direction of the main trend? If we're going day trading, less than 60 minutes, you need to go up to the 60 minute time frame and the daily to understand that main trend. So these are some basic rules, again, that should become part of your natural routine to go up and down those time frames to really understand and confirm the main direction of the trend. So let's start with confirming a trend. This is a recent short trade for LB on the 60 minute time frame that hit the Wave5trade target, as you can see down here on the right. I want to take particular attention to the Wave 4 pullback on the 60 minute, highlighted by the green rectangle here, and also the gap. We're going to use this as a point of reference when we go up a time frame here, so please take note of this gap before we got the Wave 4 pullback in the green rectangle there. But firstly, just to reaffirm our setup criteria, it's always good to keep going over this for this particular trade on this time frame. So we've had the Wave 4 pullback. It's pulled back into our amber zone. Remember, that's an 80% probability it's going to go on and make a new Wave 5 low in this case. On that Wave 4 pullback, on that last candle here, we got this big indecision, so a good sign of exhaustion on this move. Then we got the confirmation red candle closing that particular day on the 60 minute time frame. So really good indication that that Wave 4 pullback had found good resistance. Secondly, the 535 oscillator during the Wave 4's pulled back between 90 and 140%. And then thirdly, we have the stochastic pulling back in the overbought zone, and so all of those three stars are aligned. We've confirmed that this is a potential short trade on the 60 minute. Remember, we need to go up to the daily time frame to confirm the overall trend is bearish. So this is LB on the daily, and observe where are where is a longer term bearish trend in the third wave currently on the daily. So we can see here this is really strong bearish momentum, and we've had the wave 1, the wave 2, and we are in that wave 3. So we are in that strong movement of that third wave. Remember, the third wave and Elliott wave sequence is the strongest impulse move in that trend. We can see it's down, it's obvious it's down. And just to remember, we looked at the gap on the 60-minute. This is that same gap. This is what it looks like on the daily. We had the big gap down, the big move down there. So notice the green rectangle is a pullback against the main bearish trend. Yeah, main bearish trend, and then we've got 3 days in this green rectangle, and that responds to on that 60-minute, that same wave 4 pullback in the green rectangle there. Also, it looks like it's found resistance on this doji and formed this doji on the third day there, at very near the high of the high after it gapped down. So that's always, you've got to look at this and think, right, this is actually looking like a really good resistance level there. I found that potential trade on the 60-minute time frame. Everything's backing it up on the daily now. I've got that indecision doji on that day. We are at a big resistance level. It should turn back down now. Okay, also notice on the bottom here we've got the false breakout dots. This is the first time these occurred on this bearish move. So now the momentum's really picking up on the daily time frame for this bearish move, and these start to appear right on the last day of this wave 4 pullback on the 60, this green rectangle. Remember, just as we're starting to get exhaustion, it starts to turn back down again. We get the yellow dots forming for that false bar stochastic there. So as you can see from this simple method of moving up a time frame to confirm the main trend, it's vital. It's a vital skill to help find those ultra high probability fifth wave moves. We will do more examples in the following session. Remember, this is the main teaching video, and then the following videos below this will be recorded in live sessions with an audience, so they can help, they can ask questions, and we can go through more examples like this. So now, the continuous trading opportunities through multiple time frames. This holds true for strong growth stocks and long-term trending stocks. And as they say, when it's trending, it's trending. So over a period of time, which could be 5 or even 10 years in the case of Visa, for example, or just to run over 18 months with uplifts on earnings, there's lots of different types of strong trending stocks. The secret is, once you get that first fifth wave move complete on any time frame, you know the stock, you start to become intimate with the stock. It's behaved as it should do. It's hit that fifth wave target. You've had a great trade. You've got to keep an eye on it. So when it's trending, it respects our strategy. It must stay on your watch list to watch on multiple time frames for multiple opportunities to trade on different time frames in the direction of the main trend. But only the fifth wave moves, because as I keep reaffirming, it's the highest probability move in the Elliott wave sequence and in a trend. So as you can see here, we've got a main big bullish trend here, but we also get those pullbacks, and we get on smaller time frames, we get trends within a trend. And there are plenty of opportunities once we start to become intimate with this particular stock and we start to have wins. We've just got to keep an eye on it on multiple time frames and get in those fifth wave moves. So first of all, think back to the first lesson in this training course where I discussed the core strategy being on the daily time frame. Again, in this strategy, the daily time frame is at the core and the start point when identifying growth and trending stocks. Remember, it has a daily open, a daily high, a daily low, and a daily close for a whole trading session. Then when we put lots of these days together, we can see the truest form of where the stock is and if it's trending and which direction it's trending. Then we have the weekly time frame, which is also tradable, but for a longer term swing, and it is most prevalent in longer term trending and growth stocks really, and there will be opportunities to trade the weekly, but it also there to confirm the direction of that main trend. So then the 60-minute is our next priority, as this gives intraday swing opportunities, and then we can even go down to 15-minute and 5-minute time frames for day trading, but in the direction of the main trend again, and only the fifth wave moves, or indeed strong stochastic moves discussed in the previous lesson there. But if you want to stick to those fifth wave moves at the highest probability, and really those are the ones we should be looking on the multiple time frames there. Now I want to talk you through some trades that I carried out with my inner circle using this strategy, this multiple continuous trading opportunities on multiple time frames there. So this strategy was on stock CENX, which was and still is a strong trending stock there. Not all these setups and moves look pretty, but remember, we're looking for high probability fifth wave moves here. This is the first time I bring into the mix the fact that we can have one and only one of our indicators not staying true, but all the others must be perfect, and if this happens, we must be very conservative on the entry strategy. So as you can see on this chart, this is the daily time frame for CENX. And as you can see, the wave 4 pullback came really deep here, but did stay in the red zone. However, the 535 did slightly break the 140, then came back in again. So this is what I mean by one of those factors not quite making it there. So again, the wave 4 pullback, brilliant. Found support. It was deep, but it found support in the red zone. 75% probably it's going to go on and make a new wave 5 high. The 535 just broke slightly, but the stochastic was a good pullback against the false breakout there. So we've got the we've only got one that's slightly out of touch there. So the first trade on the CNX on the daily time frame, fifth wave hit the target. Okay, strong trend. You will notice obviously that 535 did break slightly, but everything else was pretty good. Went very conservative on the entry here. So even after the wave 4 pulled back, I wanted to get above this big pivot where the mouse is here, where we had that first move up and it failed and came back down and made the new wave 4 low. It did almost trigger again there, but failed and came back and made a higher support level, giving us an indication now. We look at the 535, we're still crowning and going back to zero. Stochastics moving higher. We've got the green arrow already for this, but it's not quite triggered, so we leave the conservative entry on at 1352, and eventually it does take us in, and then we've got the move, the fifth wave move, all the way up to the target zone and hits the fifth wave there. So again, that was, it wasn't a pre-trade, it took quite a while. We were very conservative on the entry purely because this 535 just broke the 140, but again reaffirming the wave 4 found support in the red zone, the stochastic crossed over, so we were 2 out of 3 if you like. So you go conservative, then we got it, even with a conservative entry, we got really good risk to reward into the target zone there. So this is what we call, it's high probability trading. So now the same green rectangle here, that fifth wave move is on the right on the weekly time frame. Okay, so we can see that green arrow here. When we looked on the weekly, this was our entry here. We got a green arrow following that on our stochastic, giving us okay. So this is how that particular trade looks on the weekly. It's on the third wave. So if we look back left here on this weekly time frame, we've got a really range bound period. There's no trend there whatsoever. We've had the wave 1, we've had the wave 2, we've had a big impulse leg move up, but then we pull back, but it's slightly higher than the wave 1 high and starts to move again. So this fifth wave move that we've traded on the daily is actually part of the third wave on the weekly, and that gives us confidence really, if the momentum's still going, to stay in that daily trade until we reach that fifth wave target. So long range bound period, then we start the trend. We've traded it on the daily. Remember this blue circle here with the ribbon and everything, because we will, as we're going through, we'll see where that appears, that particular first trade on the daily time frame. So again, this is the weekly time frame moved forward in time for our next trade. Remember this first trade on the daily, this is that green rectangle with the blue ribbon, that was our first trade. And then we just allow the stock to do what it does. So on the weekly time frame then, we pulled back down and formed an initial support level. We then went on and made a new wave 3 high. Then we got a wave 4 pullback on the weekly time frame and formed a double bottom. A little bit of chart craft here. We're forming that double bottom on the weekly. The wave 4's pulled back into the red zone. Really good support level there. So wave 4 in the red zone, 75% probably is going to go on and make a new wave 5 high. In this instance, the 535 was between 90 and 140%, and the stochastic crossed over in the oversold zone there. So everything's setting up very well for our potential second trade on CENX, but this time on the weekly time frame. Okay, so then we entered this time frame here. Really strong entry. Remember, each candle is a week, and we were 1, 2, 3, 4, 5, 6 weeks to the target. Really quick trade, great risk to reward, reasonably conservative with the entry. For me, I wanted to be way outside the 6-4 moving average high here, but also I wanted to be above this pivot on this third wave here. Not quite this one, because this was our fifth wave target that we hit on the previous trade. So we need to be up and above this first pivot where it failed. Then we made that higher resistance level. So 1665 was the entry. $23 took profit right in the middle of the target zone. Really can't complain about that. Really strong trade. And the second trade within a year on CENX. Really starting to build confidence, become intimate with this. Now, let's have a look at something else. So this is that same fifth wave move on the weekly time frame. So during this strong fifth wave move, we've got this doji here, okay, this tombstone doji, which must draw your attention, as it may be a bearish signal on the weekly time frame that we are trading. So during this fifth wave move, at this stage when this week closes, we've got this bearish doji here, this signal that could be a start of a little pullback here. So at this stage we would look to make the trade risk free and monitor it on the daily time frame, see what's happening. So again, just highlighting this doji. So when we go through to the next time frame on the daily, you will see what that weekly tombstone doji looks like in the yellow box. So the same tombstone doji in a week looks like this. Okay, so note the false breakout stochastic here at the top, denoting really strong bullish move on the daily time frame. We have pulled back during that week against it, okay, but it shows signs of exhaustion at the end there, and you know the false breakouts do not stop. So at this stage, during this pullback, we can see right at the end of the week we've got that indecision doji there where we're running out of juice, okay. It doesn't break the 6-4 moving average low. Remember, when we discussed potential trade management strategies, we were looking at this 6-4 moving average as one of our potential trailing stop positions. So even if on this daily here, this pullback, that tombstone doji that was on the weekly, we've got to see the signs of exhaustion there, and it hasn't taken out the 6-4 moving average low. So what does this pullback look like on the 60-minute or lower? That's what you should be thinking to yourself now. So during this week, we've pulled back on the weekly. We've got that tombstone, potential bearish move. Don't know yet, not got a crystal ball. What does it look like on the daily? So on the daily, strong bullish momentum, false breakout dots on the top, not taking out the 6-4 moving average low, and on the Friday we've got that indecision doji. Could be turning back up. You should be saying to yourself, what does it look like on the 60-minute? So on the 60-minute time frame, the pullback presents as a wave 4. It's pulling back, finding support in the green zone. So the green zone, remember, is an 85% probability it's going to go on and make a new wave 5 high. Note, it's not a perfect setup for a potential long 5th wave trade due to the false breakout dots in the oversold zone. Okay, so here we can see, because this has been a long contracted pullback during the week, which has formed that doji, we had that big move up and then it just pulled back down. So we've had this, and now these false dots have started occurring on the stochastic here. So that's one that's not looking good at the moment, okay? But the 535 looks good. The 535, the wave 4 pullbacks pull back into the green zone. The 535 is looking good there. So again, we've got 1 out of 3 not looking brilliant. So we've got to think, okay, I'm already in the trade on a weekly. Can I add to the trade on the 60-minute, or just take a totally different new trade to boost my potential earnings on this stock during the year? For me, absolutely, but you've got to go conservative with the entry because we've got one of these that's not quite right. Okay, so for me, the entry was at 20.33 here, above. You know, we've got to look for major resistance and major rejections on this 3rd wave. Remember, the 3rd wave in any move in this trend, it's a bullish trend. The 3rd wave is the strongest impulse leg on this particular time frame, and it had a rejection here and pulled back down again. So we've got to think to ourselves, actually we need to go long above that rejection price. So that was here. Okay, we also had this green arrow from the stochastics here leaving, so that's another good sign that we're going to go long. So also remember, we've got to be trading in the direction of the main bullish trend as well. So this is obvious, okay, and we've got to be confident that this is going to go on. We've just earlier on in the year we traded that daily time frame, we hit the 5th wave target. We're in this strong bullish move on the weekly time frame. That's got to give you confidence on this shorter time frame that this quicker trade could actually work out very well as well. So again, just to remind you, entry's got to be conservative because one of these 3 elements for our setup was not correct. And also, just to give us that bit of extra comfort, we've got the green arrow from our false bar stochastic forming there as well, to show us we've got a good potential 5th wave on our hands there. Remember, this sort of trade, you either add to your position on the weekly time frame, or in fact, if you've got another trading account, just open another quick trade. This is going to be, 3, 4, 5 days maximum for this sort of trade, and you should be getting out whether it hits target or not. In this case, it just tipped the target. The risk reward, even with a conservative entry, was 1 to 2 into the target zone there. To be honest, it's one of those ones where even with conservative, you've got a good risk reward, you've got to go for it. And you remember, this continuous trading opportunities on a strong growth stock, you've got to take these opportunities. It might be 2 a year, 3 a year, 4 a year. You've just got to keep going from the daily to weekly to the 60-minute, and part of your daily routine is just to keep reaffirming where we are in this main trend and seeing where we are on the different time frames in respect to the Elliott wave count, because those are going to present those really strong, high probability 5th wave moves through those different time frames. Okay, so that's it for the lesson. The videos below will be recorded live showing more examples and answering questions from the audience of people that first bought this elite training course for Wave5trade.